good to go. So, what up, everybody? Hide your wives, hide your kids. We are coming back with another mortgage real estate market update. It is Tuesday, and I've brought along two of my fantastic loan officers. I've got Les Marshall and Jody Trevino. What up, guys?
What's going on?
So today I want to talk about what's going on with the market. I want to talk about any kind of updates that you guys have, any insight that you can bring to all of these realtors, home buyers, home owners out there. And there's plenty that we can talk about, but we've got about 30 minutes.
30 minutes
Think
of goodness.
we can squeeze in there?
Oh, yeah.
I think we can do this.
So real quick, briefly, because it's been a little while since either of you have been on something like this. I want you to introduce yourself and just tell us a little bit about you briefly so that we can get into the meat and potatoes, the good stuff.
Yeah. Well, I'll start us off. I'm Jody Trevino with iTHINK Mortgage. I've been a mortgage loan originator for a little over a year now. Started my journey with this beautiful gentleman over here.
Hi.
And still going strong. I've been in the industry 7 years total. 6 of those years I spent as a real estate agent. I just saw a gap in the market and where I could kind of step in as a loan officer and make a difference. And so
Awesome.
here we are.
Awesome.
Good deal.
Les.
My name's Les Marshall. I've been in mortgage for about 2 years now. Worked on the back end, just learning the whole loan flow process of it, and decided to jump out there and become a full LO. And here I am today, ready to rock the game.
I bet you
And-
worked on that back end.
I do.
And he's the
I take
realest
care
guy
of it.
you've ever met.
The realest and
I
most
am.
genuine.
I
Yeah.
am.
If
I
anybody
appreciate that.
saw Les's video, he had no idea that was going on.
Yeah.
It just kind of surprised him after the fact. So head on over to my page, his page, I Think Mortgage's page, and check out Les Marshall.
I appreciate you. Thank
Yeah,
you, Mark.
absolutely.
Thank you, sir. I appreciate
So let's get into some things. What's going on? What are you guys seeing out there? Who wants to go first?
I'll start us off.
Yeah.
I heard it earlier today, but I'm going to say it the same way.
Okay.
Today is a beautiful day because reports.
Regardless of the cloudy, muggy
Yeah.
San
Well,
Antonio, my
in the-
hair is all
Yeah.
messed up. Go ahead.
regardless of humidity.
There you go.
No, but in all seriousness, the reports did come in on inflation from last month.
Yeah.
So good news is inflation is down. So what the Fed's doing is working. I know over the next 2 days, the Fed will be meeting. The plan is still to raise 50 basis points.
Right.
What's kind of interesting, though, that I saw today, looking to the future, is for February, when the Fed meets in February, they were also talking about the 50 basis point hike.
Right.
Now they're looking at that because of the way the market's moving to only be 25 basis point hike.
Okay.
So that's something that I think is a little promising, but also, we know how the nature of the market. Between now and February, a lot can change.
Right.
But things are looking promising. We're seeing a little bit of reduction in rates. And I think consumer confidence and small business confidence is up.
I agree with that. And one thing that I do want to preface anytime we mention the Fed is hiking rates, typically the rates that you're seeing now are already in anticipation for what they're going to do.
It's a good point.
So as you guys see rates dropping all over the place, they're not dropping like you would think, but
Yeah.
they're coming more to a comfortable, historic average, if I can say that.
Right.
But yeah, Les, what about you, man?
So let's take that into consideration. So we see rates are starting to drop.
Yeah.
Right. So we've got buyers that are on the fence. Do they continue to wait? Do they see where the rates are going? Or do they jump out there and get in while the getting's good? Because I'm going to go out there and I'm going to say it. Now's a good time to buy.
Yeah.
And the reason that I say that is because you fast forward 4 or 5 months into the future, hit summertime, your inventory's up, buyers come off the fence. For every one buyer you have now, we've got 2-3 buyers you're fighting later.
That's so true. That is so true. And I think that's a great way to put perspective or shed light on a bird's eye view of what's actually taking place. Because for a little while, almost 2 years, we were in bidding wars. People were paying over value prices. And mind you, rates were at historic lows. I mean,
Right.
almost scary lows, in my opinion, that you look at how much you're overpaying, actual money that you have to stay in the home in order to recoup that versus truly what people are worried about right now is their mortgage payment, right? And I think when we take those things into consideration, there's never a wrong time or a right time. Right. Because in the grand scheme of things, and who was I talking to yesterday? I was talking to somebody, but I basically said, ask your parents what their rate was when they first bought their home. But it was a twofold question. It was ask your parents that, and then ask your parents how much money they made when they sold their house or refinanced it or what have you. The rate at that point did not matter.
Right.
It just didn't. And I think what we as Americans are having a tough time with is reality. In the sense that, okay, I'm going to wait for rates to drop so that I can get into this comfortable payment. But then all of a sudden when that does happen, what it does mean is your prices are going to go up again.
That's the give and take of real estate.
You know?
Exactly.
So you kind of got to just get in while the getting's good, regardless, and stay in the home. If you're planning on buying and leaving in the next year, well, I hope you're able to just hold on to your home, you know, versus thinking that you're going to buy and a year later sell and make a profit like what took place in the last 2 years. And that was unprecedented. I mean, that's very rare that happened. And there's plenty of people that made out like bandits, and more power to them. But I believe we serve more of the first-time home buyer, this is my home for my family type situation versus the investor. And I'm not saying there's anything wrong with investors, but if you consider yourself an investor, then you know the risks. Right?
Of course.
So what do you guys want to get into? Let's talk about a couple of different things that you're seeing out there. I mean, I would imagine that days on market has probably increased in our market. But what we're not seeing too much of these drastic price cuts. And I mean, you see it on social media, the drastic price cut. But really, was it a drastic price cut if you were already $100,000 overpriced?
Exactly.
Back to reality.
Back to reality.
Let's talk about that.
Of course.
Well, one thing I wanted to touch on what you were talking about just before, and I'm going to say something.
You gonna buy me dinner first?
Yeah. Before I touch, I'm going to say something. This is my opinion.
Okay.
But I don't see real estate ever, and at least in our market, going down in value. I think historically, real estate goes up in value over time, no matter what.
Absolutely.
So what I always think about, and what I encourage people that are on the fence to think about, is real estate is the best wealth creation vehicle we have in this country. And so it's one of those things where I firmly believe one day real estate is not going to be affordable for the masses.
I agree.
And so it's kind of like you've still got this window of opportunity to get in, even if you don't make a ton of money or have a ton of assets, and take advantage of it. And so what I've been telling people to kind of dumb that down is, okay, let's say the market does crash. Well, wouldn't you rather own real estate than not own real estate during the crash? I think that's the biggest.
That's a great perspective. I mean, yes, I've always thought about that, but I've never put it in that light. Like, it's better to own than to not own, regardless of if the world's on fire or not.
And that's where
At
I think
least
we
you got a place to go.
Exactly. And that's where I think we get so caught up in what's the market doing? What's the Fed doing? What do the articles say? When we just dumb it down a little bit, and it's like, dude, would you rather own real estate, even if things go bad, or do you want to still be renting someone else's real estate?
That's a good logic right there.
I'm telling you,
And
learn from this guy.
And I think, you know, to piggyback off of that, you know, borrowers, they're worried about all these variables that they can't control. You need to worry about what you can control, right? And a good loan officer is going to educate their borrower on how to control those variables and what it's going to take to get in the house. Don't be afraid of it. You know, I look at simple things. If you stop eating out, you know, once a week, how much does it cost you to eat out these days? You know what I mean? You know, $50, $75, you know, go to a nice restaurant. If you tally that up 4 times a month, you're saving almost $400
You're not wrong.
in eating out, right? Don't eat out. You want to eat out, or you want to have your own house, right? So control the variables that are within your grasp. Find out where you can cut corners, get into the house, and start building your wealth.
Absolutely. And it's one of those things that you do have to sacrifice at some point in time if you want to progress and move the needle forward. Back to inflation. You guys checked out what the price of fried chicken is these days? I'm just saying.
Ridiculous.
Mark was very hurt by that recently.
I was hurt. I'm like, I'm already in the line. There's a car behind me and in front of me. I can't just
I
dip.
can't get out.
I can't dip, y'all.
Like 2 weeks later, and it's
Yeah,
still
I'm
killing
still
him.
hurt. Yeah, I haven't been back since.
That's a hell of a way to close.
I'm like
Just
HEB
trap you between two cars.
Legit.
Yeah, inflation's no joke.
Yeah. But I do want to, JC, if you can, over on the reference pad that we have here, if you can just go to Google, open up another tab to your right there, and just search historic home values in Texas. Because I want to take a snapshot bird's eye view and then just kind of talk about it for a moment. Because I think that's something that most people don't go to images. And there should be a pretty good, click that. Click. Well,
Pick the
what is
pretty
that
one.
one right there? What is the third one?
I like the one with all the colors. On
Yeah.
it. There it
Well,
is.
there you go. That shows this, or a chart that shows
Look
this.
at the state of Texas right there. Maybe that.
Where do you see that?
Right next to that. Yeah, what's that all about?
Nah. Well, there is one that you can find that shows you a snapshot view of like 1978 to today.
Mm-hmm.
And our, what is that called? A graph is truly, what is this? Perpendicular?
Yeah, well, it depends.
It's
but
damn
yeah.
near perpendicular. It's at a slant.
Linear.
Yeah. We haven't gone backwards.
No.
And I just wanted to show that
Sure.
to the folks that will pay attention to this, that, hey, take a snapshot back.
Mhm.
All this stuff you're hearing on YouTube and the news, most of the time they're referencing California, New York, all these places that just don't really, I don't know, have anything to do with us.
Yeah,
Mhm.
absolutely.
California, always a roller coaster.
Mhm.
Why? I don't know. Doesn't matter to me because I don't live there.
Yeah.
When you come here to listen to advice and what you should do, maybe different things around that, we're always talking about Texas.
Yeah.
Right.
Why? Because that's where we lend.
Well, and when I think you go back to Texas as a whole, we've always been very prideful of our state.
Mhm.
And so I think one of the things we love to stand on is our economy. And I think because we have so much pride in the state of Texas, our leadership is very sensitive to the state of our economy.
Yep.
Right.
You're not really worried about what the rest of the country's doing as long as Texas is okay.
I agree.
And I think that's something people should keep in mind.
Oh, and that's a great point.
Historically, we exist within that bubble.
Correct.
I mean, just because we have such a strong economy, I mean, you come here to Central Texas, San Antonio in specific, it's military city USA. I mean,
Right.
we've constantly got an influx. People are coming here in droves because of the strength of our economy, and that lends itself to a strong housing market.
You're not wrong. And do you think, and this question is for both of you, do you think that because of the last 2 years, it has unfortunately changed the mindset of potential home buyers into thinking that your home shouldn't be a place for a nest egg for the future and generational wealth, like you were saying? It's more of a way to make money.
Yeah.
Does that make sense?
Right.
It's kind of skewed.
Like the house hacking stuff. And,
Yeah.
Yeah. I think yes, and I think the super low rates had a lot to do with that too, because it got people dipping into pools that they probably shouldn't have or wouldn't have before.
Right.
So I would agree with you. I think it did change at least the younger pool of consumers and what their focus is and what they're going to leverage real estate for.
Yeah. No, you're not wrong there. How about you? What do you think?
I think it's an instant gratification kind of thing. You
Yeah.
know, in this new age,
That's what I was
I
looking
want
for.
it now. You know what I mean?
Yeah.
You're not planning for your future. You're not looking at the long haul. You want to get what you can get now. You
Right.
know what I mean? I think with proper planning and investment, you can set yourself up for generational wealth. For
Yeah.
your kids and your kids' kids.
And what was going on in the market, to Les's point, is I think people started to think, oh, this is a get rich quick.
Yes.
If I get it right, in 6 months, I can make
Yes.
50 grand, 60 grand.
Believe it or not, when that was all going on, people were still waiting for it to drop even more.
I know.
Like, are you kidding me?
Yeah.
You can get a 1.99 rate. I think I'll wait until it hits 1.5.
Yep.
Like,
Yep.
come on, guys.
Yeah.
And like you said, the instant gratification, I believe, has a lot to do with millennials Gen Zers
Right.
that most of the things that they do in life these days are instant gratification.
Mm-hmm.
Cell phones, vehicles that you don't need to put gas in, all of the things that we're going through evolution wise are now hitting our industry.
Right.
And not from a logical standpoint, but just from like a mindset and it being skewed standpoint.
Yeah.
They'd much rather rent than buy and be tied down. All the while, 5 years later, they're still in the same place. So like, where were you going?
And giving up a few $100,000 in equity.
Oh my gosh,
Yeah.
yes. Yeah, you're not wrong. So it's just a tough thing that I think a lot of folks have trouble wrapping their heads around these days. You ask parents for advice, and I don't know if they're not taking the advice or they're not given the right advice, or the parents are the ones that are reading the news and then regurgitating things that are not accurate. Who knows?
Well, and then you have the group that you can give them the facts and reality all day,
Right.
but they just want to be right.
Right.
Exactly.
So some people just aren't going to take the advice. But, you know, it is what it is. And if you listen to the experts and the professionals, you'll probably end up in a good position at the end of the day.
Absolutely.
JC, I'd like to see what percentage of millennials are homeowners. Just ask the Google machine.
I just saw this stat the other day.
What percentage of millennials are homeowners?
I think it was surprisingly on the rise, though.
It is,
just
yeah.
to be
It
honest.
should be.
It is.
It sh- let's see here. The latest survey.
Wow, that's
There it
pretty
is.
good.
There it is.
It's
There
almost
it is.
half.
Okay, as of the most recent census compiled in 2020, womp womp. Let's see here. So back then, 2020, home ownership was at 47.9%. That means the number of millennials that own their own home is estimated to be 34.5 million. That's a good chunk. But is that concept ending with us? Now let's type in Gen Zers.
I know, right?
Well, how old is Gen Z at this point?
I think so. I was born in '96, and I think I'm right on the cusp of millennial slash Gen Z.
So you're 25.
26 next Tuesday.
Yes, sir. Happy early birthday.
Yes, sir. And I bought my first home at 22. I think I was 22.
Oh man, now I'm getting FOMO, man.
Don't miss out.
I know.
And okay, what is this saying here? More Gen Zers are buying homes than ever before. Okay, maybe we're wrong here. On January 7th, 2021, womp womp. Why is it that when we look for this information, we can't find it? Are we being suppressed?
No, hold on. Okay, that's pretty interesting, though. If you read right there, it says millennials became the dominant home buying generation, purchasing 38% of all homes sold during the largest residential and commercial migrations. So they actually surpassed everyone else, but so they're buying more than anyone else, but they don't have the largest share of the market, is what it seems like.
But we
So the
are
motivation's there.
Yeah, I believe we now are the largest share of humans.
Yeah. Just not homeowners
Just
at this
not
point.
homeowners. Yeah. Okay, so scroll up just a tad so we can see that share of buyers. No. When I say up, I mean down. My bad.
Like swiping
We're
on a phone.
We're on a Mac. Yeah. So that there is showing what? Jody, you're close enough. What does that say?
That's just showing share of buyers and sellers by generation. So Gen Z's way at the top. They only are representing 2% of the total home buyers and sellers in the market.
2%. So we were right. It's like home ownership is dying. And
Well, but I think if we slow down a little bit, if we look back 6, 7, 8 years ago, that's what everyone was saying about millennials. But then we gave millennials time to mature.
Sure.
And now, like this is showing here, you know, they're
exploded.
purchasing more than anyone else at the moment. So I think that's something you got to.
Now, devil's
Zoomers.
advocate. Let's say you parlay that with the concept that we all think that is happening, which the affordability issue is touching base at home with a lot of Gen Zers. They're believing the news and going, I can't afford a home, so why even go down that road?
Right.
Why? In my opinion, they've got a fear of rejection anyway.
Yeah.
And it's better to just do what I'm doing because it's working versus trying something else because of the short and instant gratification. They don't look long-term, 5 years, 10 years type situation. Am I crazy?
No, I don't think so. I think that, that's instant gratification is a huge thing these days. And I was reading something the other day that was kind of interesting, but it was talking about how our generation has a hard time making decisions or staying committed to big things like that because it's all available at once.
Yeah.
Whereas before, you only really knew what you knew, but now you can Google anything.
Information overload.
Overnight expert on anything.
It's true.
There's always that next shiny object.
Yep.
That is so true. Well, I want to talk about what you guys are hearing in the market from, let's say, your real estate partners, your buyers that are applying things of that nature. What are you seeing? Because what I feel is the market slowing down a bit, not like any other, for example, California, like I would say, but it has slowed down here.
Sure.
And when things slow down, it causes those that don't do much business, don't have as much exposure, aren't truly the expert yet, aren't able to be honest with their buyers, all of the things that it takes to do us, mortgage thinkers, of course.
Yeah.
They're dropping out.
Yeah.
They're door dashing. They're going back to their old profession.
Instant gratification.
Right? It's like they can't weather the storm or dig their heels deeper into the dirt to hold their ground, to look into different or turn on different spigots that they never did before.
Right.
Try teaching a home buyer class. Try doing this. It's like, I've never done that before. The phone's not ringing anymore. I think I'll come back.
It's not easy anymore.
Right. What are your thoughts on that?
Man, so yeah, like you said, it's not easy anymore. You can't reach out and grab a loan anymore, like you mentioned. I can understand, finding your side gig. I get it. The motivation, just the constant bombardment of negativity kills motivation. And it's a cumulative effect.
Yeah.
I mean, it's shared by everybody in the industry. I mean, you see it affecting everybody.
Right.
So it's hard to overcome that and stay motivated. And like you said, go teach a course. At this point in time, it's the doers that are going to inherit the kingdom. It's the ones that really dig down and find any way they can to make a loan happen, to get a buyer into a home. Those are the people that will succeed. Everybody's going to fall off. Everything's going to open up, and those people will literally inherit the kingdom.
That's right. And it happened not this drastically, but in 2018, it was a very similar market to where everybody was like, okay, we're at 5.5%.
Right.
I think I'll wait. So it just kind of slowed down. Refinances went away. It was all situational, divorces and estate sales, things of that nature. But we all made it through that and came out better on the other side because we did dig our heels in and go, all right, let me change how I do business. Let me change where I fish for the fish. Those types of things.
Yeah.
You know?
To Les's point, I think when things get tough and the people that got in when it was easy and they just go away, on the consumer side, I think the important thing to his point is make sure you're with a loan officer or a real estate agent that truly is accountable to you. I think, if you have reservations, but you're with the right loan officer, we're not in the business of setting people up to get foreclosed on.
Right.
It's not what we want to do.
Right.
We don't want our client to call us in 2 years and say, hey, I can't afford what you put me into.
Right.
I think that's all of our biggest nightmare.
Sure.
So I think now more than ever, when the consumer is questioning, is it good or not? And you have a bunch of people that got in for the money and maybe aren't here for the long haul. Just consider who you're getting the info from.
Yeah.
And if they have your best interest in the forefront or not.
Absolutely.
Great point. I think this is the time where the experts will shine, or at least the ones that are passionate about what they do enough to take the customer situation individually versus offering them something that they offer to everyone that may not be the right fit. And then in turn makes you look like a shyster,
Yeah. Sure.
to be honest.
Yeah.
You're just doing this for a paycheck.
Right.
I'll be honest, when I first got in this business, I was doing it for a paycheck, and it quickly transitioned into, wow, I can help people and help them after many others have said it's not possible.
Mm-hmm.
Right.
And that to me lit a fire. And
Yeah.
it was like, okay, I want to help everybody.
Sure.
And I think we're in a market like that to where I call it recession proof.
Mm-hmm.
You've got a lot of folks out there. And by the way, if you're getting something out of this, share, hit the like button,
Yes,
the thumbs up, put the reminders, do all those things. I'm not good at reminding you guys to do that.
JC hit the
But the idea is recession-proof business means that the folks that are well off, the folks that typically would put your 20% down with great credit that are shopping these rates, they're probably not going to buy because in their mind, they don't think it's the right time to buy.
Correct.
Right.
Or they're only going to buy when they need to buy if they're moving out of state, things of that nature. Now, mind you, if you're a homeowner and you have to move, you're not going to move. It's highly unlikely that you're going to move and then go rent.
Right.
You understand the concept of
Yep.
gaining equity. You
Yep.
get the concept of paying yourself back eventually, all that good stuff. But the demographic that I'm talking about right now is your lower credit score,
Exactly.
your needing down payment assistance, your folks that maybe have multifamily generational properties that they're seeking for their entire family.
Right.
And this is a market where we've got to roll our sleeves up as industry professionals
Yep.
and provide them with the options, give them the credit advice, give them the roadmap, so to speak, that
Definitely.
allows them to thrive eventually. Because give it a year, 2 years, 3 years, those people are going to thank you immensely because no one else had given them the time of day.
Right.
Correct.
Yep.
They don't care about the interest rate. You tell them, hey, you qualify for 250, and right now you tell somebody they qualify for 250, the most common response is, oh, I can't find anything for that.
Yeah.
Right.
Meanwhile, there's like thousands of properties on the market in that price range.
Yeah.
It's just this
Yep.
concept of, I'm used to this, I'm not going to settle for less.
Yeah.
Well, then you're settling for nothing then.
Yeah.
Yeah.
Why not get into the house, build up some equity in it, and when you're ready to upgrade. You know
Correct.
what I mean? Sell it.
I think
Invest in yourself.
every time I've been told this is my forever home,
Yeah.
I've told them instantly,
Yeah.
I'll see you in 3 years.
Yeah. Absolutely.
Yep.
Yep.
I'll see you in
100%.
3 years.
100%. Yeah, I think going back to what you were saying, a good loan officer is gonna be a good life coach as well. For
sure.
You know, we are teaching home buyers how to improve their life to set them up for success.
Right.
We're going to teach them how to get their credit right. We're going to teach them how to cut corners. We're going to teach them how to save their money. We're going to teach them the right direction to go. We're going to set them up for success every time.
Right.
Because we care about what we're doing. And that buyer will come back every single
Absolutely.
time.
In addition, we work on referrals, guys.
Yeah.
Please.
If we do a shitty job, we're not going to get any more referrals.
Correct.
What's the point of giving you bad advice?
Exactly.
You know?
Exactly.
Yeah, this was good. I think, were we at 30-minute mark yet? Okay.
Beautiful.
I mean, you guys have anything else to add to this? We want to continue to do this every week, once a week at minimum, getting you guys some different perspectives out there, getting you some real information, not just because we want more buyers in our laps. No, we want the right buyers. We want the folks that are looking to build their future for everybody.
Yeah.
That being said, guys, do you want to cap it off with anything?
One thing I'll add when you were talking about the well-off people.
Yeah.
One thing I've noticed is they may not be selling and buying a primary, but if we don't do enough to get in front of the home buyers we're talking about, then the wealthy people are going to be the ones that purchase the home they should have bought or we could have empowered them to buy, and they're going to rent it to them.
Yep.
And that, if that doesn't bother you as a loan officer or irk you, I think there's a problem there.
And what it actually does is puts first-time home buyers or the dream of home ownership further distanced away.
Widens the gap.
Absolutely,
Yep,
it
it
does.
does.
Because you've got your Black Rocks and things of that nature that have tons of cash that it's set aside for that very reason that you're saying right there. they want the millennials, they want the Gen Zers to just rent forever.
Right. Yep.
And the rich get richer,
That's
et cetera,
right.
et cetera. And
That's
you
right.
never really get your piece of
Right.
that American pie.
Right.
That's right.
You know?
It's here for
You
everybody.
got anything to add, Les?
Hey man, it's a state of mind. Everybody don't be fearful. Let's get out there. Let's find a way. We're here to help you. We're going to make it work. Everybody, let's get out there.
I like it.
And remember, only you can prevent wildfires.
I love it. Gentlemen, it's been a great day. It's been a wonderful Tuesday. I hope everybody out there is having a great day and leading to a great evening. If you've got any questions regarding mortgage, real estate, insurance, any of those things, I can promise you this. We're not going to lie to you.
Yeah.
We will give you correct responses. And if we do not know the answer, we'll let you know. We don't know. But if there's anyone out there that can find those solutions, those answers, those hard to find answers, we're going to do that for you. We will
Absolutely.
commit to that for
Right
sure.
on.
You know?
Right on.
So that being said, I'm going to try and end this again the same way I did before without laughing. And it goes a little something like this. If you're out there, anytime you think of new home, leverage my home finance, any of those things.
Should we say it on 3?
Yeah, 1, 2, 3.
I
think
think
mortgage.
mortgage.
Thank you, guys.
Awesome.
Thank you.
That was cool.
Right on,
Good
brother.
job.
Good job.
Good job.
Yeah, buddy.
Are we off the air?
And we are off.
Finally.